Hi, y'all. So I've gotten a few people with questions about what a tax return looks like. So I figured what I'd do is just give you a real high level view of a tax return and then maybe do some more detailed ones because I don't want to overwhelm you. But okay, Miles. So here's a classic 2017 1040 return. This is for an individual. This is anyone filing single, married filing jointly, meaning if you and your spouse are combining your income and being taxed on one return. So here's a classic. Abby Doe will fill out on the top as their information. If you had a spouse, their name would go here, your last name would go here. And whatnot. You go in and you first say, okay, here's my filing status. So if you're single, you're not married, you would select single. And then exemptions, you get an exemption for yourself. If you had a spouse, you'd get an exemption for a spouse. And if you had dependents, like children, you would get exemptions for them. And that's where you would list them. You can also sometimes claim older parent, and so you would get their exemption as well. So think of an exemption as like a dollar value for every person. So each person has a certain dollar value to them. They can either hold it to and claim it themselves, or they can be dependents and someone else gets the benefit of that dollar value for a person, a body. Okay, so that's where that goes. Then they take a sum that's all the way over here, and they add up how many exemptions. So you can see if you're single and it's just you get one exemption. The very first line on your return, if you look, it breaks out over here, income, and then adjusted gross income. So for most people, the main item that they have on their return is on line 7. It's the amount that comes over from their wages, salaries, and it's your W-2 income. So that's where you start off with. Because what the IRS wants to know is how much of your income combined from all your sources should you be taxed on. So you start off with W-2s. That goes there. This is off of box number 1 on your W-2. So if you were looking at a W-2, box 1 is what goes over here. And then they say, okay, what about interest? Do you have any interest that you earned on like CDs or savings accounts? If you did, if it was over like $1, you'd put it here. So that adds up. Did you have dividends? If you did, it'd come over here. Did you get any refunds from any states last year? And if you did, it comes over here. There's a little bit of a trick to when it's taxable, when it's not, so I'm not going to go there. But let's assume the taxable portion goes here. If you got alimony, if you were divorced, you'd get it here. If you had any capital gain, so if you had stock that you bought and then you sold it and there was gain or loss, you'd report it here. So think about it. This income portion, the IRS is trying to capture all of your income combined and see how much is truly taxable. If you took out money from IRAs, you'd have to recognize it if it's taxable here. Any pensions, if you had a real estate or businesses, a business would go here to line 12. So if you had like a side business you were doing, you'd report the income on there. Farms, unemployment, if you got any unemployment income, you would have to pick it up here and it would be taxable. And then if you were retired and you had Social Security benefits, they would come here. So this is like total picture. As you can see, for most people, it's just line 7. Well, let's say most single, just starting off, kind of young people, it's just box 7. Now you go to the portion of your return, which is really adjustments. So this is where you can knock off the taxable piece. So let's say your total income is 50 grand. Some of that can be reduced by the main piece is really student loan interest deduction. So what you can see is if you have student loan interest that you paid, it reduces your 50 grand to 49,700. So, and this caps out at 2,500. So that's the most you could claim on a return. But let's just say this is the main piece that reduces the taxable income from 50 to 49,700. That's high level. Most of this doesn't apply to everybody. Really, in these moving expenses are not traditional moving, has to do with relocating for jobs, blah, blah, blah. So an educator expenses is a $250 deduction here that you get if you're a teacher. So for the most part, you get the student loan interest is the main piece that most people get to use. So now you get to that 49,700. And now what you find out is the 40 miles. Keep it down. The 49,700. All right. Shh. Stop screaming at the cat. Okay. Then what you get down here is, if you look in line 40, it says itemized deductions or standard deduction. So, for the most part, an individual, if you're single, the standard deduction that you get is just flat out dollar amount is $6,350. But if you have over $6,350 in deductions coming from charitable, state taxes, real estate taxes, mortgage interest, you get to itemize. So if you have over the $6,350, you can do what is called itemize, and you can add up all those other expenses and get a bigger dollar amount of a deduction here. But everybody, if you're just a typical single person, the flat amount that you get is $6,350 here. Okay. So now the $6,350 reduces the $49,700 to $43,350. Okay. Then you get the exemptions. Now remember we talked about exemptions up here? For one exemption, you only get $4,050. And that's what it says here, $4,050. Based on the number of people you're claiming, whether your spouse, 2 kids, whatever it was, all that adds up and you get $4,050 per person. If you're single, you just get the $4,050. Now it brings your taxable income, that's what 43 is, to truly being only $39,300. So the amount that you're getting taxed on, like when you get your W-2, don't think, oh, I was taxed on my tax return for 50 grand. No, you weren't, because you got all these little deductions, and in the end, the real tax that you're paying is on $39,300 of income. Okay, that's key. That's what line 43 is. Then they say, okay, if that's your taxable income, how much tax should you be paying on it? And there's these crazy IRS tax tables that say if you're this status and your income is this, here's a real flat line. It throws it over. It tells you it's $5,570. That's the amount of tax that you owe on your $39,300. Okay? Stop there. Summary, we found out your taxable income, and now we know what the tax is on that true taxable income of $39,000. Now you come down to here. Don't worry about this top piece. We're doing really high level, very simple return. Line 64 says, okay, what did you actually pay to the IRS for tax? Federal income tax withheld from your W-2. This is the amount of money that you paid to the IRS in withholding. So this is federal withholding, and it's on your W-2. It's box number 2, federal income tax withheld. You had $3,000 withheld, but your tax is $5,570. For that reason, you owe $2,624. You need to adjust your withholding at your job so that you have enough covered. For whatever reason, it's too low. Most people, if you claim 0, you're fine. If you claim 1, you're typically fine. It's when you start messing with that W-4 and trying to adjust it too high that you end up in these type of scenarios. So not only do you owe $2,624, which is the difference of $3,000 and the $570 that you owe in total tax, the IRS also is assessing you a penalty of $54 because the IRS wants their income gradually throughout the year. So as you get paid every week or bi-week, you have withholding for the IRS, and that's the way they want it. So that's a very high level, hopefully one of a few, just to give you an idea. If you have any other extra questions, we can go into itemized deductions later on and how that works. But this is just real quick, real simple, just to give you an idea of how it works.